For a while now in the plant-based sector, there really has only been one industry leader, which is Beyond Meat. But just recently, the Swedish plant-based dairy alternative company Oatly just IPO'd, and from a revenue perspective, they are quite equal to Beyond Meat. So a question one might ask oneself is, in what companies should you invest in going forward? Well, that's what we're going to talk about here on the PlantStock channel today. If you're new to this channel, then welcome. If you're not, then welcome back. And if you haven't subscribed to the channel yet and you're interested in having information when it comes to Oatly, Beyond Meat, Tattoo Chef, to name a few, make sure to subscribe and don't forget that bell button. And if you want to help me out, don't forget to smash that like button, as you will help me out getting this video out to more people out there. Thank you, folks. Truly appreciate your help. Now, if we just take a look at the stock chart, take a look at Oatly first. Ticker symbol OTLY in the NASDAQ, like Beyond Meat. We can see that it's trading at 25.75. Went up yesterday about almost 2%. Pre-market, going down again about 0.5%. And if we look at the last month, it has been a roller coaster, as we do expect from these growth companies, these disruptive growth companies. And because we're comparing the companies, let's take a look at the price to sales. It's about 32 at this moment. And if we take a look at Beyond Meat, ticker symbol BYND in the NASDAQ, it's at $155, $156. Yesterday, it was basically standing still, and pre-market, it seems to be standing still as well. And the last month or so, it's also been kind of a roller coaster, not as much, but still, we know this company normally has a short sell about 20 to 30%, so a lot of things can happen, a lot of volatility. And if we take a look at their price to sales, it's about 23.52. So on paper, it does look more attractive than Oatly, on paper at the very least. So the question we're going to ask ourselves right now is Oatly a more attractive company to invest in than Beyond Meat? So I've taken a look at an article that came out about a week ago. Is this new IPO a better food stock than Beyond Meat? We're just going to quickly go through it, and then I'm going to give my own opinions on this. In the beginning, she states here that when it comes to Oatly, there seems to be that a lot of people are interested in it, but when it came to the IPO, it didn't rocket as much as Beyond Meat, as we know. Beyond Meat actually doubled on its first day of trading. And that's something definitely that they did not do. They went up, though, about 20%. So it's still a pretty good gain there, right? Now, she goes in and talking about the oat-based empire, that it actually booked about 420 million in 2020, which is 106% year-over-year increase. So that looks really good. I don't know if you've gone into their investor page. Take a look at there. It actually does state here that Oatly drives growth for the oat market. So as Oatly goes, so goes the oat category, right? They accelerate the overall non-dairy category. In the United Kingdom in 2020, looking good here, Oatly grew sold for about 100% more, 99%. And the overall oat market went up about 42% there, and Oatly's part was 27%, looking really good there. In Germany, it's crazy numbers here. Oatly went up about 200% in revenue. Overall, 60% oats alternatives, and Oatly 23%. And in the US, looking really good too, 182%, almost 200% there too. And we know Oatly hasn't been in the US very long. So, and overall, oats are about 14% in the US, and Oatly gets about 4%. And that's not so strange, as we probably know that when it comes to the US, plant-based alternatives, when it comes to soy and especially almond, my understanding is, are doing really well there. But they have existed there for a lot of years. So we'll see if Oatly can conquer that market as well. I wouldn't be surprised at all if they did. Now, in the article, we also find out the TAM possibilities here, right? That is about a $600 billion global milk industry or dairy industry, right? And also here in the investor relations, it's about 592 billion. And that's a market that Oatly is addressing, right? So even if Oatly is doing really well, she also does highlight that what's the catch here? Well, we know that they are at a loss like Beyond Meat. They're not profitable yet. And when it comes to production capacity, they haven't been able to deliver to everyone who wants it. It's a good problem to have, right? That the demand is out there, but they haven't been able to deliver. But she also states, as we've talked about on this channel before, they're doing really well anyhow because they're building facilities now to meet the demand. So now she comes to the question that we're talking about here. Is this a better investment than Beyond Meat? But she does talk about here that, again, from the IPO, nothing special when it comes to Oatly here, because Beyond Meat basically within the 2 months after the IPO went up about 250% gain, right? I don't think, to Oatly's defense, that's not so strange. I mean, Beyond Meat opened at about $2 billion market cap, right? And Oatly went at $10 billion. So it was already very overvalued before it opened up, right? So not so strange there. Now she goes into Beyond Meat talking about their overall growth and the difficulties because of the pandemic, as we know also on this channel. She compares in 2019's fourth quarter, its sales growth was still 212%, and then shot down to about 140% in 2020's first quarter, before the crisis, the Rona started going, right? But then when she talks about in 2021's first quarter, as we talked about here, it's been a disappointment for a lot of investors and analysts out there. The sales growth came in at 11% due to year-over-year declines in food service sales. Though in her opinion, she says, though many restaurants had already reopened. And I must say, I'm not sure I agree with that. I don't have any numbers on that as of yet, but my understanding is that in Q1 2021, Rona was pretty harsh in the world still, so I don't imagine that many restaurants would have opened. And also, even if they would have, I think we could say that, because there's been a lot of debates about that in the first couple of months, when Rona is actually cooling down, people still don't move out that much right now because they've been in this culture of taking it easy. So I don't think the first 3 months of 2021, people would have gone out to the restaurants like crazy. I think they would have really taken it easy. So I do feel that she is simplifying the situation, to be really honest. She also goes on talking about that Oatly is a bigger company by sales, taking in 421 in 2020, and Beyond was only 406 million. So big difference there. Here she also compares from the Plant-Based Food Association, the non-dairy milk was 2.5 billion business in 2020, plant-based meat was 1.4. She's stating that meat alternatives grew faster, about 45% versus 20%. But she feels that Oatly has a lot of other possibilities, that they can go into other kind of markets like ice cream, cheese, and butter, which they are already doing, right? But she does highlight that Oatly is growing really fast with a lot of potential, even though it is very high now from a price to sales ratio, about 32 times sales. And as we know, right now Beyond Meat is 23. But for the future, she actually does seem to believe more in Oatly than in Beyond Meat. First of all, even though I understand what she's saying and I can see her view and her perspective, I do find her understanding of the plant-based sector kind of lacking, to be honest. Yes, Oatly has gotten a slightly higher revenue in 2020, and she does state that Beyond was hit by the pandemic, but she doesn't really go into it, right? Now remember, Beyond Meat's overall revenue is about 50%, if not more, from the restaurant business, from food service, right? So what is going to happen to a revenue if the whole industry, when it comes to food service, basically shut down in most countries? I mean, obviously they're going to take a major hit. And also, since most of Oatly's revenue is based on their retail relationships, obviously the impact wouldn't have hit them as hard. Something that is sure is that for most companies selling their products online or in stores, it went quite well for them, if not better than ever. Because no matter what is going on in the world, people still gotta eat and drink, right? Take a look at the Very Good Food Company or the Tattoo Chef. They were growing like never before. Furthermore, she is comparing the two companies by talking about the plant-based meat sector and the plant-based dairy sector, which is strange to some extent because, as I think most of us know, when it comes to Beyond Meat, they're not like the other plant-based meat companies out there, right? They are basically targeting the $1.4 trillion meat industry, right? Which gives them a whole super large TAM possibility compared to other plant-based meat companies out there. And when it comes to having a moat, I do believe that BYND is more protected than Oatly. No one puts in the kind of research to their products than BYND does. I mean, 200 scientists works on this every day. About 10% of their overall revenues are focused on perfecting their burger, right? And right now, they are at their 3.0 version. And we're probably going to expect a lot more versions coming out in the years ahead. What other plant-based meat companies could say the same? I mean, what other kind of food companies out there could say the same? Now, obviously, Oatly probably puts a lot into their R&D as well. And I do believe that they are probably the best at what they do, having the superior product. But in my opinion, it is a lot harder trying to develop a plant-based equivalent to meat than a plant-based milk alternative. I think you know this by now, but in my opinion, both of these companies are great companies, are going to do really well long term. So I think it actually makes sense, in my opinion, to have both of these companies in your portfolio long term. They are the giants in the plant-based meat sector, right? One is focused on the meat alternative sector, one is focused on the dairy alternative sector. This means that you would basically be covered and being exposed to the overall plant-based sector. With time, they will probably, in my opinion, move into each other's territories, but that time is not here. Both of these companies are overvalued at this moment, that's for sure. But long term, in my opinion, that doesn't matter. They will more than likely grow into these numbers and far beyond with time, right? But on paper, given the PS ratio, I would say that BYND Meat looks more attractive. BYND Meat is about 23 on paper right now. Oatly is 32. And let's not forget that restaurants are opening up. People are taking their vaccines. This is going to be a great year ahead for BYND Meat, in my opinion. So on paper, again, BYND Meat is the better alternative. But long term, you would be smart to actually be exposed to both of these. Well, folks, that was it for today. I truly hope you got some value in today's video. And if you did, make sure to smash that like button. And if you want to keep getting more information about Oatly or BYND Meat or Tattoo Chef, make sure to subscribe and don't forget that magic bell button. Thank you, folks. I truly appreciate your help as always. And do not forget, this was not financial advice. These were just my own thoughts and opinions. It's important to invest safe. Now, guys, have a wonderful Wednesday. Hope to see you soon, and peace out.